Hello traders, hope you're doing well. Now for the second straight day, we could see our market falling. Previously in the past, if you see after a fall, our market held on to a range. But Friday, there was around 1200 crores which went out from FII side. Again today, we could see a correction. Again has the FII started selling in the market? If yes, what can be the reason? Now in this particular video, we'll be seeing a simplified breakdown of 5 reasons why our market is correcting right now. So let us discuss about all that one by one because it is important if you're a trader or investor to understand these important points. So I have done my research. There are 5 key points. Let's discuss about all of them one by one. Now the first reason is geopolitical tension. Now, we all know the rising conflict in the Middle East. This is between Israel and Iranian backed forces. Now this is causing geopolitical tension. And you could also see there are news that there has been airstrike, right? So all this will create tension in the market. Because of that, people will be looking at safer assets like gold. This is the first point. Now the second reason why our market might be correcting is high valuation concern. Now we all know our market recently touched the all-time high level. For Indian market index, forecasting PE was somewhere around 21.5, but now we could see market has already reached 25.5 PE. So at this upper level, it is very common for people to book profits, because of which we can see a correction in the market. The third reason why our market can be correcting right now is because China, you can see recently they announced a simulation package. This will attract more investors towards China. So some foreign investors, they might take out the money and then invest in China as of now, because the valuation there is comparatively cheap. In India, things has been overvalued. This is one of the reason. In case FIIs go out also, there are still mutual fund companies, a lot of cash flow is coming in, so they have, compared to FII, DIIs has been become more strong, so they have the funds to reinvest in the market. But I'm not sure today, end of the month on 30th September, they have not made any that big of an investment. Still FII DII data is not come out. My understanding is today DII would have paused their purchase so that we can, after this expiry is over, monthly expiry is over, they might reinvest. Since FII has moved a bit outside, they're continuously selling, and DII usually whichever FII sell, they go and buy, right? But today maybe they have not done that. Because of that, market has corrected. Now the fourth reason why our market would have fallen today is pre-earning caution. You see, we have come to the second quarter now. From 14th of October, every company will start, I think it is HCL, I might be wrong, but from 14th October, all companies will start sharing their earning report. So the investors, as of now, when market is overvalued, they would have taken the money down for a while, and once the earning report come, if it is positive, they might reinvest. So because of Q2 result, people will start awaiting. That is one of the reason why people would have not invested in the market, because of which we could see this correction. One more reason is 26,000 was holding strong in the market, right? But today 26,000 level was broken, because of which, out of panic also, people would have exited. So these are some of the 5 reasons why I think our market fell today. Now I would suggest each and every one of us to be cautious at the current market. When there is a decent opportunity for us to trade, we will look into it or completely avoid trade. Now today also, when our market opened with a big gap down, I was looking for reversal setup from the upper level or from the supporting area. In between, we did not have the confidence to plan for a trade. When market came to this support here with small stop loss, I was looking for call. We understand that we are going opposite to the trend. That is why with small stop loss, if the market at least reaches 26,060 level, we could see a decent 1:2 or 1:2.5. For that, this risk was better according to the stop loss hunting concept. But market moved towards the downside. It took a small stop loss. So without thinking too much, we exited. We did not hold on to the trade for longer duration. Now there were other reasons also why I exited the trade here, because there was a red flag. Call option writers at 26,000, it is just increasing. So people are considering this as strong resistance, and put option writers are not considering this as support. So in that case, holding on to the trade did not make any sense. So we decided to exit here. Again, we waited for one more setup. Expectation was Nifty will again move towards the upside. Since Bank Nifty has given a breakdown, Nifty taking the support, I expected a stop loss hunting setup here. But that also did not work. Market did not give any breakout. It moved towards the downside. So closer to 2 p.m., I did not look into any trade. When the setup in the market is going opposite to what we think, it is better One trade is already over here. One more trade if we have to take, we have to see what is the probability. If the probability is less, again, what is the point in looking at the market? More than trading today, idea was to protect the capital. I believe I said this upper level becomes the no trading zone, but below this level also, I did not plan for any trade because stop loss hunting and price action concept is not working. Rather, market is slowly moving towards the downside. There might be other reasons also. So this is what happened in the market today. Let's quickly discuss about what kind of trading plan we have for tomorrow. For traders, since 2nd October, market is closed. Bank Nifty expiry is tomorrow. So first, let's look into that first. Here you can see at 53,000 level, put option writers are still considering this as a strong supporting area. Market is trading a bit lower than 53,000. Now there are some call option writers in the market here also, but more call option writers are in a safe zone where they're considering 53,500 as a psychological level. And see the last 5 minutes at 53,000, put option writers are considering this area as the first support and 52,500 as the next support. Call option writers are still strongly sitting at 53,500. Now whenever the market was moving towards the upside, it gave a decent price action move, not like how it happened on Friday and today. When it is moving towards the downside, it did not give any proper opportunity for retail participants to enter. Now on this 15 minutes time frame chart of Bank Nifty, I have drawn a trend line here. You can see this trend line has been continuously acting as support and this support has been broken and market is trading below 0.236 level of Fibonacci. Tomorrow within this range, anywhere the market opens, planning for any kind of trade is not a good idea. Let's say it is consolidating within this range and only later if it gives a breakout, we'll be looking for call option trade where our target can be market can go up to 53,675. Okay, that would be the target towards the upside. As long as the market breaks this 0.236 level, better to avoid any call option trade because continuously the market is falling right without proper price action. So that is something that we will be careful about. Now let's say tomorrow Nifty opened somewhere here or here and it started to correct. These are the two areas which I'm considering as no trading zone, which is 465 and 52,898. Now within this range, if market is trading, better to avoid. What we will do is simply extend our Fibonacci levels. As long as market is trading below 0.236 level and below this trend line, better to avoid any call option trade in the market. Later point of day, if we get a breakout setup, we'll be looking for call where market has chance of going up to 53,460 level. So basically two setup we have discussed for Bank Nifty. If Bank Nifty moves up at the upper level, we'll be looking for reversal setup. If it moves towards the downside, maybe after this gap down also, rather than looking for put, better to look for call option trading setup above 52,920 or 930 level. Okay, when it comes out of the zone forming a W pattern, we'll be looking for call option trade. So this is the only trading setup I'm having in my mind in Bank Nifty. Tomorrow during the pre-market, if there are additional support and resistance level, I will be discussing with you, and in the private Telegram group during the live market, we will mark important levels and look for opportunities there. Now let's focus on Nifty. Traders, this is Nifty chart 15 minutes time frame. When market was moving towards the upside, it was nicely taking support at this trend line. But when it is falling, it has been very quick. It's not giving us opportunity. Let's say tomorrow market opened with gap down. Immediately looking at this gap down, rather than entering a put option trade, better that we wait for a reversal. Now from swing high to swing low, I've drawn the Fibonacci levels. Let's say market this trend line, right? It was acting as a good supporting area, market moved, and tomorrow this trend line can act as resistance. Here if you're getting any breakdown setup, what we would do is simply draw a trend line like this. At this upper level, when we get a breakdown, stop loss will be small. If the trend continues, we will be able to capture the movement. Instead of that, in Nifty, let's say it opened with gap up about 236 level. If it is moving towards the upside, let it move. No problem. At this zone, 25,970 or 26,000 level. At this zone, if market is moving like this, people will be more confident on call option trade. But my understanding is people who sold here, they would have already exited by the time market reached here. Only random put option traders who entered today looking at this breakdown, they would be trapped when if market opens with gap up and starts moving towards the upside. So weak put option players would be removed. When we get a breakout at this zone or when market goes above 26,000, it will attract call option buyers. After attracting call option buyers, we can see a reversal. So here, if you're getting any bearish setup, that is when we'll be looking for continuation in the market on the put option side. Directly, if market opens here, starts moving towards the downside, during the first half itself, maybe by 10 a.m. itself, we can see a quick spike in the market. Maybe a candle like this, right? What you see here might move up, remove all the stop losses, later correct. So that is one of the main reason we will avoid put option trade as soon as the market opens with gap down. The market is just moving like this without thinking too much. Extend our levels. We'll mark the next important levels in the market. There we will be looking at price action. Based on that price action itself, looking for trade is better. This is my view about Nifty and Bank Nifty. Any further details will be shared in the free Telegram group tomorrow morning during the pre-market report. If you enjoyed this analysis, then share your support by liking the video and subscribing to the channel. If you think this content will be useful for your friends, please share it with them. That's all for this video. I'll see you in the next one.